Hello! Many students are not aware that there are two opportunities for them to save money on their college expenses on their 2012 taxes. The first, called the American Opportunities Credit, is worth $2,500. The second, called the Lifetime Learning Credit, is worth up to $2,000. The taxpayer must file using the Form 1040. You should have already received your tuition statement from your post-secondary institution by the end of January. To apply either of these tax credits, Form 8863 will also have to be used. For the American Opportunity Credit, the first $2,000 of eligible expenses can be applied with any remaining expenses factored at 25% until the $2,500 limit is reached. There is a limit based on how much adjusted gross income the taxpayer has. This tax credit can reduce your overall tax bill, and 40% of this credit can be refunded once your tax bill is paid. For those of you who are not eligible for the American Opportunities Credit, you can apply for eligible expenses of up to $2,000 per year for the Lifetime Learning Credit. This credit is also limited by taxpayer income. You may be wondering who can claim this tax credit. The taxpayer can claim either of these credits for themselves, their spouse, or any student who is claimed as a dependent on their tax return. For many of you, that may be your parents. What qualifies as an educational institution? Well, any post-secondary school that is eligible to offer student aid through the Department of Education. What are qualified expenses? Generally, they are the expenses that are required for the enrollment at that qualified institution. Expenses such as tuition and materials directly related to the course of study. The Lifetime Learning Credit is a bit more strict in that it does have to be paid directly to that institution. This comparison between the two credits and specific directions can be found at the following links. Or just search for the IRS tax forms. I hope this information helps you to save some money on taxes after all that you spent on your education. And after you graduate, don't forget that the interest on those student loans is tax deductible, at least until we go over that cliff.